I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So with today's type of action, yesterday's type of action, this is really what exemplifies how you have to know your time frame. You have to know whether you're a macro investor, know whether you're an intermediate trend trader, know whether you're just an active trader intraday. Sometimes you could do all 3 of them in different accounts. Sometimes you don't have enough wherewithal, enough experience to do all 3, do 1 or 2, and sometimes you just do 1 of the 3, based on your time frame and based on the time you could allocate. So with that said, on an intermediate basis, definitely things got shaken up. Last Wednesday, IBD put us in a market in pressure, market pressured, so to speak. Broke the 8-day, and then the next day went down to the 21-day, and then we sliced through those moving averages. They went to market correction. At that point, we were a little oversold. So from that standpoint, yesterday we talked about the red dog reversal. We talked about how to execute and get involved with a plan in a lot of different spots, because that's what we even went over in the morning call today. How to get involved with a red dog reversal. And tactically, you could do it for a day and a half and make nice cash flow, but sometimes it leads to major inflection points. And to me, I wasn't really ready for it to lead to a major inflection point, and I don't think a lot of people were. And I think the bears are pretty upset about the penetration we had today, and then even some bulls or some people constructive on new highs this year. Remember, I put the 80% chance last week, like I know we're in a correction, but we're going to make new highs this year, the road to 1700. But how you navigate it sometimes is frustrating. And I know for me, today was one of those frustrating days where there were a lot of setups, a lot of things triggering, and I just was in the wrong spot and maybe focused a little bit too much on Apple today where the action was horrendous. But all in all, you look at the chart here and there are lots of different trends. Here is the chart of the SPX. So here's that accelerated trend that wound up breaking to the downside. This is when IBD put us in market under pressure. Here you had a nice little 2-day move, then a snapback that actually went a little farther than people thought, making, oh, maybe the rally's back on. We snap back to this trend line, and then boom. This was the day that, market in correction, rightly so, below the 8, below the 21-day. But from the highs here of 1530 down to the low of 1485, that's 45 handles or so, just off the top of my head. So with me, I wasn't thinking that this was the end-all, but you didn't have to. So I came in actually long, right? I did it actually, if we go with the spiders, talked about the red dog reversal today, which was right here, and it made a new low. This was 149, which was the pivot, made a new low by 27 cents. So that's what your risk was, 27 cents on the spiders that came down from 153.19. So it came down 4 points. So your risk was 27 cents. And from there, it was a nice day trade yesterday. Then today, it actually opened lower, traded through yesterday's high of 150.20. And then this was a resistance. This is where I thought the easy trade would be. So I got out of my spider somewhere around here. Didn't fight it short. I was actually a little bit too caught up in Apple and a few other things, so I missed some of the other leading stocks, which I'll get into. And all in all, look where we stretched to. To retest the bottom end of this trend line. So we'll see. We'll see if we just continue right through or perhaps do a little sideways action now above this trend line. So just say we do a little sideways action, which would be pretty healthy, and then show some commitment to this 2-day move, and then perhaps, who knows, we break out to highs a lot sooner than we would have thought. So when that happens, you have to just take a step back and say, okay, it is what it is. Hopefully you were able to take advantage of it in other aspects. And all in all, again, we're coming to the end of February. You have 10 more months left. Get over it. So with that said, we talked about the red dog reversal in the financials. Here it is. Here is the trend line. Here is your reversal. Here's the low of 1725, went below it, came back above it. Some guys went along the financials, and then it also powered higher, powered through a pretty big level of resistance. It's still below the highs here, but overall, nice snapback. The home builders, nice snapback. Remember we talked about this, this more gradual trend. Here was your accelerated trend that broke to the downside. So if you're looking for a cute short or a high level stop, that was it. So maybe into this point you covered and looked for a cute long, and here we are right back to that 28.40-ish or so. So now we'll see if just say if it stops it or rejects it here. So we'll see if we hold higher and then if we continue. RTH is actually looking pretty strong. We haven't talked about retail in a while until this morning, and the retail looks pretty good. The RTH looks like one of the groups that could make highs sooner than some others right now. It held the 50-day, held the prior breakout, nice engulfing move. Talked about Home Depot potentially making new highs here. Oh, this was from the morning call, but just to show the health. Okay, what's important, sometimes, which gives you some clues whether or not we have more of a corrective process to come, is if they let stocks break out, because typically they don't. Typically bears know if we're going to be in a corrective process, you have a push through failure, they use it for distribution, and in some stocks it just didn't happen. Home Depot, this had a nice move yesterday and didn't even pull in and closed right at the highs here. If you are, go to the monthly chart, if you are a macro investor, congratulations, look where you're at. Anyway, go back to the daily chart. You saw Walmart, I wonder what that did today. Trying to poke its head through a trend line here. Target actually was down and tried to engulf a little bit. 2013 thesis talked about this nice channel in in Boeing, and even after all said and done, this huge, the engine problems, the battery problems, or this problems, or that problems. All in all, we're knocking on the door of what has been, more than a year channel, where we just held higher with every piece of bad news you could throw at the stock. So this, to me, for a macro investor, gets above 78, go for it, and hopefully you're in some now. And if if you do that kind of thing, it's a very sloppy stock for traders, but someone who wants to hold it as a swing trader or whatnot, there you go. You could read about it. We put it December 13th talking about this pattern here. And even if you go further back, it looks really good and ready to go. Talked about the Red Dog reversal in cores yesterday. Let's see what that led to. I don't know how much. I drew this morning. Okay, not much. I think I just poked through a little bit, but here is that Red Dog reversal in a stock after a nice pull-in for an entry. So with that said, lots of different kinds of action. In the tech arena, where we have the haves and have-nots, you had LinkedIn. Yesterday goes to show you stock that I love, thinking it's going to be historic highs again. Could hit 200. PS yesterday for a cute trade, I'm trying to short it instead of buying it, and then lo and behold today, because of that yesterday, I didn't touch it, and there's your beautiful pattern with LinkedIn. This was drawn in the morning call also, saying with a little bit of time, you have a nice bull flag pattern. It could be a trade above, I think we had on the price point sheet, above 160, 170, and pow. If the bears had any control, this would not have broken out that way. And it went and it closed near the highs of the day. And congratulations for a macro investor staying the course with LinkedIn. You look at your monthly chart, unbelievable. Okay, we've been talking about this setup for a year. One of my three amigos of stocks that had macro investment capabilities, and there you are. Okay, here's a nice little cup and handle. So I think some of you guys are still in it. A lot of institutions control the stock. It probably goes higher. Nice consolidation. This is your earnings gap, and bam. So the question is, can Google follow along? At this point, it seems like it can, right? It's it's a chosen high beta tech stock. I don't like the fact that it keeps getting upgraded now, but anyway, you have a nice bull flag here. I did like 2 little trades today, one intraday that worked out, and then one at the end of the day. So I have a little bit overnight. Really, the price that it's going to have to get through in order to continue and have a LinkedIn type move is through 808-ish. So if you want to be in tier 1 waiting for this to happen, there you go. If you want to have a stop, your stop should be this recent pivot. So let's hope that it doesn't get there and it goes through potentially tomorrow, because this looks like it's ready. This was your gap up on earnings, and here's your sideways action. So we'll see what happens there. Netflix also one of the chosen ones, not ready to bust out yet, but here's your earnings gap. Here's a little push, nice pullback to where it broke out from. This was your high that retraced, and now it's holding support, and looks like they can get above this 187.10 tomorrow. Perhaps it makes a LinkedIn type move also. So best in breed high beta names, LinkedIn leading the charge. Google, it's a lot bigger, so it needs more time. Netflix still in that game. I would say Amazon isn't quite powerful yet, and it's still trying to work off this push from earnings or this failure at the highs here. But overall, hanging around, above this 255, trying to get a little bit stronger. I think it's just hard to trade. But overall, if you're an investor, you've been doing pretty damn well considering the size of the move and the multi-year move that this has had, and it's still in a really nice trend. You could draw it here, and everyone, including me, I think that I can't believe it's being sustained, but it is. So at this point, you don't fight it until that changes. And as of right now, as long as it stays above this 255, stay with it from a more intermediate macro level. For a trader, it probably has to get above this recent area of about 274 in order for it to be a little bit more interesting as a trader. Maybe even above like 268 to then test this trend line. As far as Apple's concerned, I don't even know what to say. This trend that it's been in since the highs here, it's just been so controlling. Big trend all the way to the downside. We've had a few trades along the way, and net, we've made money on these bounces. Or at least I think I have. Where here was the first one. We said if it breaks the 21-day, probably bounces off the 50. It was short-lived. There was a sell. Okay, then it just continued this whole road all the way down. If you remember to start the year, it was a nice trade also. Thinking, will 2013 be different for Apple? It broke this descending channel. And the reason why we love descending channels is because look at this bar. This was really nice. And then you actually got some follow through this. So that's why we gravitated when it gets tight. And then it gapped up, 2 days failed, and then lo and behold, here was a tight range that wound up giving us a nice trade to fill this gap. And then here we are. And at this point, he said, if you come to me, Tim Cook said all the right things fundamentally. We know they have a great product line. We know that they have stuff coming. Well, what kind of statement is stuff coming? Come on, Tim. And we know that you have a lot of cash and you're considering what to do with it. Why not have all those things ready? Investors are 35% off the highs. A lot of people are getting battered and bruised. No one cares whether your PE goes from 9 to 7 or 8. People want to know that you care about the shareholders, and I know you're trying to build a company, and it's great. I have the iPhone 5 right here, and I like it. But I will say I've seen the Samsung. It's pretty damn cool too. There's a lot of cool technology coming out there. Your margins are going to get a little squeezed. You're turning, from a hyper growth company into probably more of a value play, and people probably have a tough time with a value play of a stock that's 450-ish. Okay, so maybe that stock split would have been smart. Bigger dividend with your cash load and a buyback, and then perhaps your stock's back in vogue. But anyway, back to technically, because that's what I am, a technician, and today it would have been nice if it broke above that 453, but it didn't. You go to the chart here and you will see. Here is where a lot of us, with Apple, I like buying momentum, and it just hasn't worked for so long. Here you had a little bit, and even in here, it wasn't really much momentum. You had to be somewhat perfect. So here we are, stocks hovering above 440, 435. I guess, it still has a chance of getting above this now that everyone really hates it, including me, and I think every fast money trader is like, I'm not touching Apple anymore. We'll probably touch it if it gets above 453 with some kind of volume. But overall, you could go to your weekly chart on Apple and you will see that it's in this danger zone, okay, where it's holding this support here, which comes into play right into this area. And if this were to give way, okay, your next level really is what? 420. And then I would have to think that 400 and a break of that becomes, a gravity or a magnet, so to speak. So here is the trend line on the weekly chart that's been very, very, very controlling. If I had Darcy in here, he would say very. Until it breaks with some fierce volume and ignition, it's still trapped there. It's holding on to support by a thread. I think I'd say the next week's probably going to be pretty crucial here, and whether it breaks below this and continues this trend to the downside, or tries to break this at some point. So, as a trader who's traded Apple pretty much every day for a long time, I don't know whether it's the last 5 years, a decade, it's just kind of frustrating not to have it in the mix. And I probably should have switched some gears a little quicker and paid more attention to some of the other stocks I have on the price point sheet and off the charts that have been working well, working cleaner. I do trade them from time to time, but I probably should have the focus away from there and more in that. So if you're on the VTF and in the community, I apologize if we've all been kind of gravitating to it. I think Sperling's been doing a great job. He typically holds a hell of a lot more positions than I do anyway. Even when we're in portfolio approach, maybe my average amount of positions long was 10, and his average was probably 35. So he has that bandwidth to really be involved in a lot of different things and add to them when they're working. So at this point, we'll take that as it comes. But overall, I do think macro investors that said equities aren't dead and have a plan long-term looking for that S&P 1700, we're going to get there at some point. Good luck, congratulations. And even if we don't, you still have stocks making historic highs, and it is what it is. If you're an intermediate trend trader and you happen to get flexible, in this week, starting last Wednesday, into that big down day we just saw, and you're a little flat-footed, because I'll admit I was a little flat-footed today. I'm not crying. Woo-hoo. I'm kidding. You're not alone, okay? But get over it. Put the frustration at the door. The month's almost over. Hopefully you're not in a hole, and you just could make some progress. Put a few good days together, get yourself back on track. If we do hold, just say the spiders, so to speak, if we hold on the daily chart, like I just said around here, all right, you will see some nice patterns start to get put back into place. You'll be able to put on a portfolio approach again for what could be potentially new highs at some particular point. So don't get too frustrated. I know this day and a half move could have been a lot of money in your pocket, and if you had the red dog reversal, because I had it too, and you sold too early, which I did, you're not alone, and we'll see if we digest here and hold higher and show commitment. We'll put on the right stocks at the right time and hold them, and then let the market make us some money. So I'll do that type of gear switch every different time when the complexion shows itself. I guess just right now, the way things are, it's a little bit more erratic, whether it's computers, whether it's because Big Ben was testifying or the sequester Friday. It is what it is, and just take accountability and know that there's a long year ahead of us. And did I say get over it? Well, get over it. I'm going to try and get over it tonight. Anyway, have a good night. See you tomorrow morning with Brittany at the morning call. Be well.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.